All right, hello and I am Sam. I'm the head of the Adara Academy, and today is the daily update. The date is September 25th, and we're going to take a look at some crypto markets first. Yesterday, big move in Bitcoin, to say the least. Just taking a look at the futures, right? Opening candle was at 9,770. The low was made at 7,995. It's pretty big. It's one of the biggest days ranges that we've had for the entire year, and also probably one of the more spectacular moves for this year in total. So during this time period, there was actually not too much volume. If you look at the previous volume on the last uptrend, at its peak, there was around 31,000 contracts traded in one day. So this volume candle that we had yesterday for BTC was around 10,500 contracts, which is actually pretty low. If you look at the other days, let's count how many days have had higher volumes. So this day had 31,433, 26,372. This one had 21,775. Yesterday's volume on the futures was not even in the top 10 for the previous 365 days. So this move that happened yesterday in the Bitcoin futures, at least, did not have that much volume. And it shows that the markets coming down from 10,000 all the way down to 7, where it reached the previous high volume node, was not that liquid. And there was not that many buyers in this area. Once the distribution occurred up top here in the 10,000 to 14,000 area, it just seems that there's a lot of selling going on. It'll be interesting to see what happens over the next month, 2 months. If there's continued downside movement, I would expect to come back all the way down to 5,000, or even most traded price of the year would be, 3,500 in the worst case. So here's an intraday chart from yesterday. There had been a small reversal at 9,350, came back up. At UTC 1800, that's when things really kicked off. And in the space of 1, 2, 3, in the space of 15 minutes, there was a price drop of around $728. And in the course of another 30 minutes, we hit the lows at 1,324. And then came back up and made most traded price on the day at 8,550. And I believe that's where we've been trading in ever since. Yeah, so we've been trading around 8,550 in this range right here. I would expect more continued selling pressure to the downside, just because doesn't seem like there's anybody really buying yet. This is probably a lot of stop running. Yesterday, it really shows. We'll take a look at some charts after this, and you'll see the amount of liquidations that happened. It was pretty spectacular. This is Skew, which documents a lot of the derivative products on cryptocurrencies, published a tweet yesterday that said, given the $7 million plus of selling liquidations counting, open interest has been remarkably resilient, down only 200 million. So some traders are still able to take the other side. So even with 700 million in liquidations, open interest moved from a max of 1.003 billion down to 803 million. So what was most interesting during the time is the differences in spreads between all the different exchanges. So between BitMEX and Coinbase and the futures, there was wide of spreads as $600, which just shows huge liquidity in the market and a separation of buyers between different exchanges. If there had been even arbitraging between all the exchanges, then you wouldn't have such wide spreads open up. Now, I know the volatility, and here's some more pictures. So here we can see that Gemini was minus 18.9%, Bitstamp was minus 18.4, Bitfinex at 17.88, and Coinbase at 17.41. So that's a very large spread for Bitcoin amongst the exchanges. And also, they don't have BTC, they don't have the futures on here, but there would have been significant divergence between the exchanges and the futures. So looking at liquidations yesterday, close to peaking at $250 million of totally hourly liquidations, which is insane, absolutely insane. That's a lot of money being lost by a lot of people. A lot of people were caught out yesterday in the price drop. Pavel, where do we go from here? 3 digits. $640. There we go. You heard it from Pavel. $640 coming next on BTC. So what gets me, and we'll see this tested over the next few months, is whether the stock to flow ratio that everybody just goes on and on and on about actually means anything. So if you look at Plan B, one of the more popular Bitcoiners to popularize stock to flow ratios, he is going to be tested over the next few months. So looking at the models, by 2020, price should increase somehow from where we're at 10,000, and by 2021 we should be at 100,000. Because at that point, the stock to flow ratio of Bitcoin will be on par with gold. And but it's different, you know. If you believe that scarcity has anything to do with demand, then yes, it could be the case that Bitcoin's going to be $100,000 in exactly 2 years. But for it to get there, we're talking around 20x increase if we head down to the 6,000 to 5,000 level. What I noticed yesterday is that there was a huge amount of bullish tweets happening, even in the face of these big bearish moves. Probably haven't gotten to the bottom of the market then yet. Everybody's still saying, just buy the dip, buy the dip, buy the dip. But we don't know how deep the dip is going to go yet. So just taking a look at some retrace numbers. So we've already retraced 50% from the highs, and we're trading below that 50% retrace. The next level to get to would be the 61.8 at around 7,320. And then the 83? This is a 76. So 75% retrace would be around 5,700. And then 100% retrace would be all the way back down to 3,100 or 3,200, where we made the bottom back in December of last year. So it'll be interesting to see how this plays out. There's a lot of momentum on this move to the downside. I don't think there's been any real new buyers coming into the market. There's a huge argument to be made that the tether that was being printed by Tether was the main driver of this pump up. Also, the Chinese instability was named as one of the big movers of the market. But I think we're going to find out that these narratives aren't actually true, and that there was some malfeasance happening with people who could control large sums of fake money in Tether to actually manipulate the price in certain directions. Speaking of Tether and its closest exchange, Bitfinex got a win in a lawsuit over missing funds connected with its Tether funds. So iFinex, the parent company of the stablecoin issuer Tether and cryptocurrency exchange Bitfinex, they won a motion against the New York Attorney General, who said that they don't have to turn over documents in a timely manner. They are going to be they have to continue to comply with the order, but there's no timeline on them having to turn over everything. So yesterday, I talked about Ted Livingston, who had sent this drunken text to CoinDesk. In reality, though, it was actually a prank. Somebody contacted CoinDesk and posed as Ted Livingston and gave them false information. They published actually a retraction today. They said it was the first retraction in 7 years. So Ted actually comes out and he lays out what is going to happen with Ken. So he says, after 18 months of working with the SEC, the only choice they gave us was to either label Kin a security or fight them in court. Becoming a security would kill the usability of any cryptocurrency and set a dangerous precedent for the industry. So with the SEC working to characterize almost all cryptocurrencies as securities, we made the decision to step forward and fight. We're going to take on the SEC. So instead of selling some of our Kin to the limited liquidity that exists today, we made a decision to focus on our current resources on the few things that matter most. So they're going to shut down the Kik app, they're going to reduce the head count to an elite 19-person team, and they're going to focus on one thing: converting Kin users into Kin buyers. These are hard decisions. Kik is one of the largest apps in the US. It has industry-leading engagement. It's growing. 100 employees will be impacted. So I don't know. I don't understand why they would want to move away from a billion-dollar app that they've created with Kik into developing Kin. I guess they see it as the future. So in startup world, Fidelity-backed crypto custody provider Knox launches today. I believe this is a Canadian-based cryptocurrency provider, and they have 100% insured custody solutions, which I believe they're the first to have fully insured custody solutions. Nobody else in the market is doing that at the moment. So a customer with 100 million in digital assets may choose to keep their funds with a custodian holding 1 billion in assets and advertising a $100 million insurance policy. Custodian is 10% insured. Yet the customer is given a false sense of security, believing that the $100 million policy will be able to cover their holdings. In fact, in the event of a total loss, the customer will be reimbursed $10 million, forced to accept a $90 million loss. The total limit is commonly shared across clients. Blockchain analytics firm Flipside Crypto raises $7.1 million in new funding to expand its solutions. So Flipside Crypto is an analytics startup that helps blockchain and cryptocurrency projects analyze the fundamental health. They raised 7.1 in a Series Seed Prime round to expand solutions. It's actually an interesting service. So they go through all the major crypto projects and they provide information on their fundamental health, which is both on-chain and off-chain analytics. And then they can work with projects whose token price and market cap are depressed and work with them to bring that back up to a healthy level. So that's going to wrap it up for today. There's actually quite a lot to talk about. We'll be back tomorrow. Hopefully there's some more good price action that happens in Bitcoin. This movement to the downside has been pretty violent, so it should take some time before the markets quiet themselves and return to a less volatile state. I'm Sam from Adara, the head of the Academy, and I will see you guys tomorrow.